Which fund would have made you more money if you put $10,000 into it? SCHD or VOO? I've collected all of the data over the last 10 years for both and simulated this, and the results are very interesting. Both of these ETFs, or exchange traded funds, are very popular online, but it can be hard to compare them since SCHD is primarily focusing on paying dividends, while VOO is focused on price appreciation. To compare them, we will have to look at a few key investing metrics, such as their past and current performance, dividends, price appreciation, and a side-by-side comparison to see exactly what would have happened if you invested $10,000 into each of them 10 years ago. Let's take a look at our first competitor, SCHD. This fund is owned by Charles Schwab Asset Management, and this is their Schwab US Dividend Equity ETF. Their objective is to track the Dow Jones US Dividend 100 Index as close as possible. They pay a rather large dividend and offer massive growth potential. They do this by tracking dividend-paying stocks. This makes the ETF an appealing option for investors that are looking to generate dividend income while still having some price appreciation. The fund even has a rather low management expense ratio of approximately 0.06%. Now, taking a look at their holdings, they focus on sectors such as financials, healthcare, and consumer staples. Since the fund is so diversified, it makes this an appealing option for stability during market volatility. Now, let's look at the competitor, VOO. This fund is owned by Vanguard, and this is their S&P 500 ETF. They focus on investing in stocks within the S&P 500 index, which represents the 500 largest US companies. The goal is to track the returns of the S&P 500 as close as possible. They do pay a dividend, but this is relatively low, as the fund is primarily intended for price appreciation. VOO is an appealing option for investors like myself, who want a set-it-and-forget-it type of fund. They've built this reputation through their extensive track record in the market, demonstrating continuous growth. And taking a look at their holdings, they have a large amount of this fund in information technology, financials, and healthcare. Now that we've got an understanding for each fund's objectives and intents, I've gone through and collected all of the raw data for each. So everything from the price of the fund on the day that they were introduced to the market, to the dividends, all the way up until today. So for SCHD, this was brought onto the market October 20th, 2011 for a price of just $25. So for an investment of $10,000, you would get about 400 shares. By the end of their first year, they declared their first ever dividend at 12 cents, which would have net you $48 at this time based on your 400 shares. Now, based on this, it seems fairly decent already. If we look at how it was doing on Q4 of year 1, the stock is now worth $28.49 per share, and the dividend is up to 26 cents per share. So you would have collected $381 in dividends, and if you include your stock appreciation, your total would be up to $2,167, representing a 21.67% increase so far. This is just the beginning. By year 5, you would have $2,294 from dividends, bringing your total up to $12,592 overall, with your total return coming in at 125.9% of your initial investment. The new price of SCHD is even up to 43.77 per share, and the dividend is up to 40 cents per share. We can't forget about how many shares you now own, as this has grown from 400 to 463, reinvesting your dividends. Now, before we go on and finish this for SCHD, let's look at how VOO would have performed in the same time frame. So, since SCHD was brought onto the market October 20th, 2011, we need to make sure that we are buying into VOO at their price on the same day. They were worth only $111 at this time, which would get you 90 shares for $10,000. After 1 year of holding VOO, you would have received some dividends, with the most recent being 94 cents per share, bringing your total to $321. Now, looking at your price appreciation, you would be up to $2,416 overall, representing a 24.16% increase. And by year 5, you would have received $1,634 in dividends, and your total would be $12,344 overall, showing a 123% gain. Now, we can begin to see that things are pretty even at the halfway point here, just 5 years in. Let's look at a few more data points as we close in on that 10-year performance interval that we first set out to review. By year 7 for SCHD, we would have seen a total of $17,961 in gains, with $3,600 coming from dividends directly. Comparing this to VOO, we would have seen $17,183 in gains, $2,560 coming from dividends. Things are still very close, but by year 10, SCHD would have made made you a grand total of $39,005 compared to VOO returning $40,438. Now, as we close things out here on the 10-year basis, as you can see graphically, VOO does better by $1,000. Now, we did have enough data to bring this to 13 years, as that is how long it's been since both these stocks were brought onto the market, and the 13-year result looks a lot different than the 10-year. We can see that VOO would make your initial investment worth $56,600, whereas SCHD would be worth $51,400. And on that note, we can conclude if you invested into both of these stocks approximately 10 years ago, VOO would have made you more money. For more financial content, definitely subscribe to the channel and leave a like if you enjoyed.